The recent declines in stock market indices raise the question whether we are dealing with an upward trend that has been corrected or whether we are finally returning to the main trend after an earlier correction. I will talk to our guest about this, David Jones, Chief Market Strategist, Capital.com. Hello, David.
Hi, hello.
David, what do you think about stock indices?
I think it's really interesting. Last Thursday, we saw US stock markets fall. The S&P fell by nearly 6%. This was the biggest fall that we've seen since markets made that bottom in March when they got really scared about coronavirus. And we've seen over recent weeks, markets, it feels like going up nearly every day. There's been very little in the way of sell-offs. So I think last Thursday was the sort of volatility that we haven't seen for a while. And the concern is, I think, about a second wave or a further spreading of the wave in the US of the coronavirus. It's really scared markets. We've also seen them ahead of the US Open today fall overnight. And I think at the moment it's too early to say, is this a reversal of the recovery we've had since the 23rd of March for stock markets, where we've seen them rise after that coronavirus bottom. But I do think that it makes, I think, for the rest of June, we should get maybe more used to this sort of volatility. I think the days of stock markets where it feels like going up every day are over for now. And I think we're going to see a much more volatile market now, because I think last week we saw in the US, states like Texas were experiencing record admissions of people because of the virus. So the worry is, with them loosening restrictions, that it's getting a hold again. So I think we're going to see a very nervous stock market, at least for the rest of this week. So I think that the sentiment has definitely changed since last Thursday. We have to wait a bit longer to see whether it can regain that uptrend again.
This week will be full of macroeconomic data. Tomorrow's retail sales in United States. What are the market expectations?
I think the market expectations are going to be pretty low. You know, we've seen obviously various degrees of lockdown in the US from state to state. So I think when it comes to retail sales, a weak number here isn't going to be a surprising number. So I think perhaps the bigger potential is if the number ends up being slightly better than expected. I think if we have a negative number, a very negative number, it's not really going to have an impact on the market, because we all know that plenty of retail outlets were shut down. I think what will be more interesting will be, as time goes on, in a month's time, as the restrictions have been lifted, do we see a return more to normal? So for me, I'd be looking for surprises on the upside this week from those sort of numbers. You know, a number not as bad as expected. I think if it is bad, it's not really going to affect market sentiment.
So you think that the worst is behind us, looking at the US economy?
I think, well, it's interesting, isn't it? Because I think if you look at stock markets, what stock markets have done, they've almost become, it feels, completely separated, maybe, you know, even more separated perhaps than stock markets usually are for the US economy. But I do think with the spikes that some states have seen in terms of infections over the last week or so, I think that's going to be the worry. You know, we've had our own issues here in the UK. I think with the lockdown, with people feeling we went to lockdown too late in the UK. I think in the US they had perhaps more of a relaxed approach again than we did here. In the UK, and clearly it's a much bigger country. They may be more spread out than we are, but I think these potential second waves is what's going to be watched. And I think if we do see more infections, then that doesn't look good for the US economy. But saying all that, the Federal Reserve, the central bank, have done so much, you know, to try and prop up the economy that perhaps we have seen the worst. But I think it is going to be an awfully long time before we get back to normal. The chair of the Federal Reserve just a week ago said it could be years before the labour market in the US gets back to normal. So while we're not seeing that in stock market performance in recent weeks, I think, you know, all economies are going to take quite some time to get back to where they were at the end of 2019.
And what is your view about the main currency per euro dollar?
I think it's really interesting what we've seen with currencies. We haven't had much direction, I think, in March and April. If you look at the dollar index, the dollar against a basket of other currencies, we've seen plenty of volatility. And then into the end of May, we saw dollar weakness. Now we have seen over, I think, the last week or so, we've seen something of a recovery for the US dollar. But I do think that perhaps the story for the rest of this year, so if we take a slightly more longer term look, is we could see further euro recoveries. So I think perhaps that for me is a really interesting market to watch. You know, we had seen the euro strengthen up until about a week ago. It has lost a bit in recent days because of the dollar coming back slightly. But I do wonder if in 3-6 months' time we're sitting there, we're seeing the euro much higher than where it is now. I think the dollar has done well in times of uncertainty. You know, it's seen as the world currency, a safe haven. And perhaps, you know, I think France are unlocking, or are saying today, I think the president of France today, Monsieur Macron, is saying they've beaten the virus. So perhaps we'll see a more of a return to normal quicker in the European economy than perhaps in the US economy. So perhaps we will see a bit more upwards momentum for the euro in the weeks ahead.
On Thursday, there will be a Bank of England meeting. And what is your view about that meeting, about the day?
Well, I think the Bank of England, I think like plenty of central banks did act very early on in the pandemic to push the rate in the UK. I think it's 0.1% is where the base rate is in the UK, and that's the lowest I think since the Bank of England was invented. You know, so we are at absolute record lows. So I'm not expecting any surprises on interest rates. What will be closely watched, because as well as announcing an interest rate decision or no change, the Bank of England will also tend to give its comments on the overall economy. And clearly we all know what a state economies are in after lockdown, but I think that will be the fact that moves markets. So traders will be waiting to hear, what does the Bank of England think about the state of the UK economy? Is it going to do more quantitative easing? Of course, that we've seen plenty of times over the last 10 years since the financial crisis, pumping money into the economy. I think that's the thing that's going to be watched, and that's the one that will have, you know, to cause some short-term volatility, at least in the pound. So no changes to rates, but what do they think about the economy going forward?
You think that after Thursday, the Brexit topic will come back?
I think that's a really good point, you know, because it has been pushed to the sides over recent months, and already, I think over the last week in the newspapers, it's starting to get a bit more coverage here in the UK. So I think as maybe the focus shifts away from the virus and hopefully things continue to get better, we're back to focusing on Brexit. And I think, you know, they've already said, the government, that there will be no extension to the deadline, the year-end deadline. So the clock, as ever, on Brexit is always ticking, you know, and now more than ever, I think we need a definite something in place in the right time that actually governs what the UK's relationship with Europe is going to be when it comes to trade. And I think if that is delayed, we could again see plenty of impact on the pound, or our own currency here. So I think Brexit, I think, as you say, is going to be very much back in focus in the weeks and the months ahead of this end of year deadline, where some sort of deal has to be agreed, hopefully, with the European Union.
David, thank you very much for this conversation. Thank you for your analysis. And my guest and yours was David Jones, Chief Market Strategist, Capital.com.
Thank you.